Let's be honest, cash flow isn't the most exciting topic in the world. Well, maybe it is if it's all in the positive, but here's the thing. Managing cash flow well for your business can mean the difference between whether it thrives or whether you've got a stressful business. And the good news is it doesn't need to be complicated. Think of cash flow as your business's financial heartbeat. It's the money coming in from your clients and going out to take care of expenses like salaries, rent if you've got a physical facility, and software subscriptions. Positive cash flow, that's what we're aiming for. That's when more money is coming in the door rather than going out. And negative cash flow, well, that's a red flag that we want to avoid unless we're able to really explain what's going on. Now, you might be thinking, I believe my business is profitable, so I'm bound to be okay, right? Well, not necessarily. A business can be profitable on paper, but still run out of cash. And if you don't have cash on hand to pay your bills or to pay your team, then that's a real problem. So let's dive into a couple of practical ways to keep your cash flow healthy. First, make sure you're invoicing promptly relative to the time that you're performing services. The faster that you send out invoices, the faster you'll get paid. And don't be shy about following up on late payments as well. Next, consider offering incentives for early payments. Maybe a discount for paying up front can make a big difference. Maybe paying for multiple periods at a time to get that cash flow in early. And just make sure that, well, that you're spreading out the effect of that cash over the period that it was meant to cover. And then third, make sure that you're keeping a close eye on your expenses. Recurring costs like subscriptions or services that you may or may not use, they definitely can sneak up on you. So make sure that you're reviewing what you're using, cancel what you don't need, and redirect that cash to where it's needed most. And finally, make sure you're forecasting regularly. Take a look at what's coming down the pipeline, both in terms of revenue and expenses. Are there slow seasons that you need to prepare for, or any big bills on the horizon? Make sure that you're planning for it, because planning ahead helps you avoid those cash flow surprises. Now, of course, there are tools out there that can help make this easier. Accounting software like QuickBooks or Xero can help give you a real-time snapshot of your cash flow, and take advantage of automated reminders for things like client payments or things that are coming down in your neck of the woods. And that'll help take some of the awkwardness out of follow-ups if you're leveraging those automations properly. Some common pitfalls, here's what trips up a lot of small business owners very often: overestimating future income. Now, it could be tempting to assume that a big project will pay out soon, but until the money's in the bank, it really isn't guaranteed. And then when it comes to paying for things, just be careful with credit cards and loans. As long as you've got a plan for being able to make use of that capital to earn a higher return than the interest that you'll need to pay, then you'll be in good shape. And just make sure that you've got a clear repayment plan on those debts you take on. Here's the takeaway. Managing cash flow does not need to be overwhelming. Start by keeping things simple. Track your money, plan ahead, and keep a little cushion for emergencies. I'll talk about that in another video. And remember, you don't need a finance degree to make a big difference in your business's financial health. Just a little attention and consistency can go a long way. We've got a lot of resources that can help small business owners out that are interested in taking this into their own hands. But if you're feeling stuck and need a little help, let's chat. Together, we can get your business's financial heartbeat strong and steady.